Welcome to the RetireCoast YouTube channel. Our topic today is going to be 11 tax changes millennials should know for 2026. There were a tremendous number of changes that were made in 2025 with that big, beautiful bill that everybody heard about but nobody completely understood. And a number of those benefits are directly targeted at the Millennials and Gen Z group. Although others will see some benefits as well, but there are some that are really just for people who are wage earners. What I mean is you punch a time clock and you're not on a salary. And as I mentioned, there are people that are going to see the benefits even if they're on a salary. But unlike what people suppose, these benefits are targeted not at the wealthiest people, but at you and your friends and neighbors and relatives at the middle class. You're going to see some big benefits, but I'm not going to keep talking about them. We want to show you and talk to you about it here. So please listen and watch. Also, don't forget to go to RetireCoast.com where we have a complete article on this topic. And we also have a podcast that was about 30 minutes long, so it's more in depth. But between our article and our podcast, you can learn everything else that this doesn't actually give you the fine details on. And please come to RetireCoast.com and listen to our podcast as well. Thank you.
Okay, so let's talk about taxes. Some really big changes are coming down the pipeline for 2026, and if you're a millennial or Gen Z, you really need to pay attention. These shifts could seriously change how much you owe or how much you get back. But let's be real, who's got time to sort through all that dense legal text? Well, we do, and in the next few minutes, we're going to break down exactly what you need to know so you can come out on top. So let me ask you something. When you think about doing your taxes in 2026, how do you feel? Confident? Or is there that little voice in the back of your head worried about a nasty surprise? Yeah, you are definitely not alone. The thing is, the biggest changes are often the ones hiding in plain sight.
And that's where this quote just hits the nail on the head. These new tax breaks aren't going to show up automatically on your pay stub. Nope. They are buried in the details. And honestly, if you're not actively looking for them, you could be leaving a serious amount of money on the table.
All right, first up, let's dive into how these 2026 changes are actually rewarding the way you earn a living these days. We're talking about brand new deductions that are designed for things like overtime and tip income, which, is a huge deal for so many of us in this economy. So one of the biggest new goodies is this deduction for qualified overtime pay. And this is super important, you have to know that it only applies to the premium part of your pay. That extra time and a half, that's the part you can deduct, not the whole overtime check. It's a small detail, but it makes a huge difference. So who actually gets to claim this thing? Well, it's really aimed at hourly workers. Think healthcare, public safety, manufacturing, service jobs. Basically, anyone who sees a clear line item for that overtime premium on their pay stub. If you're salaried or you're a 1099 contractor, this one unfortunately isn't for you. It all comes down to how your pay is documented. And it's not just about overtime either. There's also some new relief for tipped income. So if you're working in a restaurant, doing deliveries, or driving for a rideshare app, listen up. The only catch? The tips have to be reported. So keeping good records is now more important than ever. Okay, next section. Let's talk about credits for modern life. These are all about helping with some of the biggest expenses we all face. Everything from raising a family to navigating those healthcare costs. Now, before we go any further, it is absolutely crucial to understand the difference between a deduction and a credit. A deduction lowers the amount of your income that gets taxed. That's good. But a credit is a dollar-for-dollar reduction of the actual tax you owe. Think of it this way. Deductions are good, but credits are great. They're like cash in your pocket. And to see just how powerful a credit can be, look no further than the child tax credit. It's getting bumped up to $2,200 per qualifying kid. So if you have a child, that's $2,200 just erased from your final tax bill. That is a massive benefit for young families. Okay, here's a term you're going to want to remember: above-the-line deduction. What makes these so special? Well, they lower your income before you even get to the part where you decide whether to itemize or take the standard deduction. That means pretty much everyone can take advantage of them, which is a huge win. So what kind of stuff are we talking about here? Well, these key above-the-line deductions include things like contributions to your health savings account, or HSA, the interest you pay on your student loans, and those new deductions we just talked about for overtime and tips. Remember these, because they're all pieces of a much bigger puzzle.
Let's zoom in on one of those because it is an absolute powerhouse, the HSA. The contribution limits are going up in 2026. You'll be able to put away up to $4,400 for yourself or $8,750 for your family. And the best part? Every single one of those dollars is an above-the-line deduction that slashes your taxable income right off the top. And that brings us to the real secret here. The key to absolutely crushing it with your taxes in 2026 isn't about one single deduction or credit. It's about a strategy called stacking, and it's how all these different pieces can work together to create a way bigger impact than you'd ever expect. So here's the bottom line. If you're just looking at these tax changes one by one, you are totally missing the point. The real win, the real magic, happens when you understand how all these rules interact with each other. It's all about the combo. So what does this stacking actually look like? Let's walk through it. Say you max out your HSA contribution for the year. That's an above-the-line deduction, right? So step one, it lowers your adjusted gross income, your AGI. Now here's where it gets really cool. That lower AGI might suddenly make you eligible for the full child tax credit, something you might have been phased out of because you made too much. See the domino effect? The HSA deduction didn't just save you a little bit. It unlocked a totally separate, massive credit. That's stacking. So once you get how powerful this stacking thing is, it kind of changes everything, right? It means we need to shift how we think about taxes. We need to stop just reacting in April and reporting what already happened. The real savings come from being proactive and planning ahead all year long. And this quote just says it all. Your tax software is great for looking in the rearview mirror, but tax planning? That's about looking at the road ahead of you. It's about deciding what financial moves to make before the year is over. So let's put it all together. What's your checklist for 2026? First, you gotta understand how to stack your deductions. Then, max out those powerful above-the-line deductions, especially your HSA. Always remember, credits are pure gold. And please, don't assume what's taken out of your paycheck tells the whole story. The big takeaway is this: plan your finances, don't just file your taxes. Look, at the end of the day, these 2026 changes are the new rules of the game. The people who come out ahead will be the ones who know how to play. So my question to you is, now that you've got the playbook, how are you going to make it work for you?